Hi all, welcome to the orientation session day 2. For those who joined new today, I am Mahesh. I am working as a project manager in one of the leading banks in Australia, ANZ Bank. I have total 11 years of experience into QA, okay, mainly into ETL testing, and from last 5-6 years I'm into banking sector testing, okay. Um Hope you have seen yesterday's video, okay, and you have some fair idea what you can expect from this session, okay. So before we start, right, further, I see a couple of people joining new today. So do you have any questions or have you seen yesterday's video? What is the expectation from this session? If you can post on the chat, it would be helpful for us to understand the audience also. Okay, so meanwhile you post it on chat. I will reiterate what exactly this training is all about. Okay, so by seeing at the experience, right, we felt that not just QA will work out. Okay, and having a knowledge on QA will not help testers. Okay, so it should be coupled with the domain knowledge as well, which will help the testers to do the effective testing on whatever application they are testing, right? So how does we do that? So we broadly classified into a couple of domains. Okay, so one is banking and financial services. The second one is insurance. These two are the core areas these days where we see a lot of products coming into the picture. Okay, so the training that we will be doing now uh, is not dependent to US or Australia or any other region. Okay, so the concept that we discuss are generalized concepts which will help you to understand the industry. Okay, and then specific to the country, it actually varies from country to the country, so we cannot touch base on all those concepts. Okay, so at this moment, this training will help you in understanding the basics or the concepts that are required for that are used in these respective areas. Okay. Now the first series of training is on banking in financial services. Okay. We call it as BFSI. Okay. Services industry and insurance. Insurance, it's both life and non-life. Okay, so this will be covered in the next training sessions that will happen in the future. Okay, generally BFSI is banking, financial services and insurance, but we have split it into two areas. Okay, now before we start, right, I would like to see the expectations from you guys. Okay, if you can please post on the chat, it would be helpful for us also to understand what you are expecting from this training. All right, I see very silent faces. Okay. All right. So today's topic would be one, the forms of business organizations, and second would be types of financial institutions and uh, their need. Okay. So there's a question here. Okay, wealth management and AML and SharePoint. Okay. Yeah. So anti-money laundering is nothing but AML. Yes, we will be covering it as part of this training. Okay. SharePoint, you mean to say the tool, or okay, SharesPoint, you mean to say the trading point, you mean to say, right, Ramkrishna? Okay, okay. We may not, yeah, we will be covering about the trading also, but not into the in-depth actually. We'll discuss about the concepts like futures, options, what's an put, what's a call, etc. Okay. Yeah, the brief. Yes, right. Okay. All right. Thank you. Okay. So coming back. So we'll start with the forms of business organization. Okay. So a person decided to set up a business in a free country like US or any other country, or even in India. You can start your business just like that. But think of complications or risks that come in picture. Okay, so you will have to forecast the complications, the risk, the whatever what is it, the insurance, the income tax declarations need, etc. So in good olden days, right, there were nothing like I have to legalize whatever business I'm doing, or I have to register my company as such. Okay, but as and when the laws have started becoming stringent and the flow of money has to be regularized, okay, there came a lot of complications. Now that's where the concept of registering a business organization has been made mandatory. To register one's company, and this is done at registrars of the companies of regular of respective country. Okay, now here the form of business, whatever the type of business you are doing, right, it's broadly classified as sole proprietorship. Okay, or it can be LLC, which is limited liability company. Okay, and then the next one is corporation, and then there is uh, uh, and then there is last and not least great partnerships, or limited partnerships, or LLPs again. Okay, so these are partnership based ones. Now what is a sole proprietorship? This means the owner is solely responsible for the activities of the company he or she is running. Okay, so he or she has set up the business. Okay, and whatever, one second please. So he or she is running the business, and whatever are the liabilities are nothing but if something happens, the ones he has pledged as part of this what do you say, organization or the business he's running, that would become liable. So liable in sense it would be at the loss. Okay, so the liabilities here will become his personal assets. Say suppose his business went into loss, and he took loan from the bank. Okay, so his personal property will be under scanner, and it would be sold off in order to waive off the debts that he took from the bank, right? So in this case his personal assets are under are liable. Okay. Now, any legal issue that crops up, personally he would have to attend to that. Okay, he or she would be should have to attend that. Okay, so that's sole proprietorship. So whatever profit or loss, this is he is the person who will be taking care of it. Okay, that's sole proprietorship. In this case, you need not show your profit or loss statement to anyone except to the IB, income tax department. Okay. Okay. So your profit loss, you under sole proprietorship, you need not show to anyone. Okay. So you are not liable, or you are not what do you say? You are not liable to anyone, or you need not show your profit or loss statement to anyone. Okay. So that's sole proprietorship. Now it has its both advantages and disadvantages. Now the next one is LLC, or limited liability company, which means here part of your it's same as sole proprietorship, but part of your profit you can buy personal assets, okay, which are not company property, okay, but are earned as you are the owner of that LLC company. And if any loss is incurred and you have and you are liable to pay any of the debts, these personal assets that are bought from the profit of LLC cannot be auctioned, okay, or cannot be under the scanner of the lending organizations. Okay, so that's one advantage of having LLC. Now here the tax details, okay, in this case, if you see, as he or she is entitled to use the part of your profit, he or she has to pay the double tax. In the sense, say suppose person 1 is owning LLC. Okay, in year 1 he took $10 million as loan and started business. Okay, and at the end of financial year 1, he made 5 million dollars as profit. Okay, and this is not after tax that is paid. Okay, so there's some concept called as profit after tax, PAT. We call it as PAT. So PAT is something like you earn profit from your organization, and then this is your profit. Say suppose you're in US, you will have to pay 30% as tax. Okay, 1 second, Iram. Yes, yes, Iram, you had a question. Unmuted. Hello. You raised your hand, Iram. Any question? Okay. All right. So 30% is the tax, say suppose. Okay. Now for 5 million, what would be your 30%? It's 1.5 million is your tax. It's going as a plain tax. So what's your PAT now? Yours will be 5.5 million minus 1.5. That would be 3.5 million dollars will be your PAT. Okay. Now in this 3.5, as the owner of LLC, you are liable to use, say suppose 25% for your personal assets. Okay, this 25% is given to the owner of the particular organization, and he can buy his assets, okay, which are not part of your organization. Okay, so this 25% is again taxable. okay, based on the respective country's laws. Okay, so which means you are taxed double times. Okay, but the only advantage here is you are you can use it to buy your personal assets, and then which are not part of the company, and if something goes wrong in the future, they are not under the scanner. Okay, and they cannot be auctioned. Okay, that's the advantage of this particular one. Generally, a mid-sized companies will go for LLCs. Okay, some what is it, 10 to 50 million dollars organization will generally go for LLC, and based on the continuity of the business they are looking at. Okay, the next one is corporation. Okay, so far so good. If you got any questions, right, you can ask us in the middle. Okay. Okay, now this is also similar to LLC. Okay, but the only difference here is um, you will have to have at least two or three members, but the only thing is two or three board members will be there. Members should be there actually, which can be independent board members or direct board members also. Okay, so board members are someone who will collectively to take the decision. Okay, they may not be the direct partners, they may or may not be the partners of that particular organization. Okay, so any decision, business decision, okay, has to be taken in consent with the board members. Okay, so that's corporation. Now here we got two types, one is S corp and the other is C corp. Okay, so there's a little difference between these two, and we are not going into the in-depth of it. Okay, so again here you will have to buy company assets only. Okay, personal assets are again not liable in this particular type of organization, but still you if you have to buy, if any of the member want to buy it, it has to be bought with the consent of the board members again. Okay, so that's corporation. Now the last but not the least is the great partnership. Here it is pooling one, or say it would be generally two or more, will be more members will pool the money and decide the partnership model, the share. Okay, and will start the organization. Okay, so this will be a collective decision model. Okay, where if anything goes wrong, all the partners will be liable for legal proceedings. Okay, now the advantage of this is you will have a single taxing mode, and the general tax, say suppose it is 30% in US, right? Here based on the amount that is being pooled and the number of what do you say employees or the employment generated, based on that the tax will be reduced. Okay, generally it would be somewhere between 15 to 25%. Okay, so that would be the tax that is that will be levied on the profit that is earned. Okay, so if usually if it is 30% in US, that would be reduced to 15 to 25% based on the employment that is generated and the amount that is being pooled. Okay, so that's great partnerships, LP and LLPs. So far so good. Any questions? Okay. Now there's a let's see the differences between GP, LP, and LLP. Okay. So great partnership, general partnerships are, sorry, I wrote it as great partnership. It's general partnerships. General partnerships are all the partners are liable. Okay, and they will be liable personally. In the sense, if anything goes wrong, their personal assets can also be auctioned. Okay, so that's the general partnership. Limited partnership is if at all there are three partners in it, you only one partner can be what do you say, made liable for any personal losses. Okay, in the sense, if anything goes wrong, his personal assets can be auctioned. Others too might can be exempted from this. Okay, this generally happens where that particular person whose personal properties are liable will get more share in the profit. So that was accepted well before the organization has been set up. Okay, so that's limited partnership. LLP is, it's like one or more. If more than one are being liable for this personal loss, then that's called as LLP. Okay. Generally, right, this would be a LLP would be a professions maintained partnership. Like say, suppose doctors or CAs, okay, or any professional what say professional group, okay. If that is formed, then that's LLP. Okay, this will help actually in pooling more money, in the sense, as these are professionals and they have their name in the market, they can use the goodwill, okay, or branding to do to get or do business. Okay, so that's LLP. Generally, PwC is one classic example of LLP. It's maintained by it's maintained by professionals. Okay, so PricewaterhouseCoopers, you might have heard. So PricewaterhouseCoopers is an LLP. Okay, so far so good. Any questions? Okay. Now the next topic is the type of financial institutions. Okay. Now generally we hear the concepts like banks, okay, commercial banks, then NBFs, okay, and housing finance banks, housing finance corporations. So what are all they? Can anyone let me know what are all these? Investment banks. If someone have heard about all this, can anyone let me know what are they? Okay, I see no one explain. Okay, fine. Say I have some money. Okay. Now what would I like to do actually? Yes, these are all financial services, right? Okay. So I'm a customer. I have money, some money with me. What will I do with this money? What would I want to do this? A, I would want to save it for future. Okay. Or I may want it to multiply. So I want it to multiply and earn me more money, which means like it should act as an income. Okay. C, I don't want it to sit idle. Okay. I want it to as investment, right? To earn more. Okay. More of it, out of it. Okay. So this you want to have as an income in sense regular income. Okay. Regular income where you get money at regular intervals as a fixed amount. So in this case of C, you are not expecting it as a fixed income. Maybe down the line, 2 years or 3 years or 5 years down the line, you want some return from that money. Okay. So that's the difference between B and C. And first will be you don't want to do anything. You don't want to take any risk. You want to just save it for future use. Okay. So that's primary purpose of having your money. Now tell me any other ways of using your money. Okay, let's confine to these three. Now let me okay. Investing in shares. Okay, investing in shares will come into this C option, right? Where you want your investment to earn more out of it, and you are not sure about the timelines. Okay, maybe now or immediately next day, or it can be any other time, right? But it's not, you are not sure about the returns here in the third case, right? So that's the reason I'm moving shares into the third scenario. Okay. Now tell me, how will you want to have this? You want to have all these options safeguarded, right? Right, and done in legal way, obviously, right? Illegal ways you have many, but you don't know where it should be done, right? So there should be some organization which will help us to do either of these three. Okay. And it should be done in legal way. Okay. So that's called as a financial institution. Okay. So it can be a bank, it can be a investment bank, it can be an NBF, non-banking financial services, or you can invest in housing finance corporations, where you give the money to the HFCs, and they will lend the money to someone else, and based on the returns they earn, that will be shared to you. Okay. So these are few financial institutions. Now basically financial institutions are two types. One is banks, and the others is non-banking financial services, non-banks. Okay. So banks are again two multiple types in commercial banks, investment banks. Okay. And then non-bankings will be insurance companies. Okay. And brokerages. And then you have investment companies, UITs, which are unit investment trusts, face amount certificates, management investment companies. Okay. And then you have something like NBFs, also something like credit unions. Okay. So basically the money you can invest in these areas, okay, something like commercial banks. So now I have you see the Citibank and then HSBC. These are all commercial banks. Some few examples of it. So what they are doing is they will take your money, okay, they will save it or keep with them, and whenever it is necessary you can take it. That you can withdraw from the bank or using ATM cards or use by providing checks, etc. So that's how you can deposit as well as withdraw the amount from your banks, okay, or they will be using it to provide some fixed interest per month. Generally it would be per quarter, okay, or if needed it can be per month. So that depends on your standing instructions that you will be giving while depositing this amount in the commercial banks. So these are the standards that are defined by Fed in terms of USA, and for India it is RBI, okay. So these interest rates will be defined by the Fed or RBI or the respective regulatory body of that particular country. Okay. Now this is more about commercial banks. Now the next level of commercial banks is investment banks, where they will be taking the money from the customers and they will say that, hey, we will invest in somewhere. It can be mutual funds or the market, into the marketers, the shares generally we say, okay, but it's a broader topic. I'm just confining today to markets, just giving the name as shares, okay, or it will invest in mutual funds, or it will have ULIPs, unit linked plans, which will be again directly linked to the share market, okay, or they will invest in some bonds like the government bonds or private equities, okay. So or some face values, just like if suppose some company needs money and they don't want to go for an IPO is initial public offering, which is again into the secondary market. So if the company don't want to do that, they will issue some bonds saying that, hey, you invest the money in our organization, we will give this particular interest rate, okay, which is more than the what commercial banks are offering you, okay. So that would be the bonds. So that would be done using the investment banks. Generally the company will tie up with any of the bank and they will issue the bonds through that bank, okay. So these are few of the advantages of having an investment bank, okay. Now these points will be discussed again in depth in the coming classes, but for today you just understand what's the purpose of having a commercial bank, what's an investment bank, so on and so forth, okay. We have other types of banks as well, okay, but when we discuss it in the coming sessions in detail, we'll have a discussion there, okay. Now there are others like non-banking financial services like insurance companies. So insurance companies, they will pool money from customers and use it as something that they would provide to the use it as a source of clearing any insurance activities, okay. So this is a larger topic. When we discuss about the insurance, we'll have a discussion about this, but on a high level it will have life insurance and non-life insurance. So simple example, I have a life insurance product, say suppose some life insurance product where if I invest some X, in case of accident, you will be getting 10X, 10 times of whatever you have invested. And in case of death, you will get 50 times, 50. Okay. So this is for accident, and this would be for life death. Okay. So say suppose how will the insurance companies work in this case? So I have some 1 million people who took the insurance in a given year for an amount of average, say suppose $1,000. Okay, so this would become a huge amount, right? Now generally in a year you will not have many people who, yeah, by getting premiums, right? Correct, Ramesh. So in this case, not all 1 million people will have all these issues, right? Say suppose 10%. The general standard here is it's 6%, 6.2% only will be affected by accidents or life deaths in a given year. So of 1 million, you have only 6.2% affected. So this is almost 6,200, 62,000 people getting affected. Say suppose all 62,000 are dead. Say suppose for worst case, I mean touch wood, it doesn't happen like that. So say suppose 62,000 are affected and they met with an untimely death. Okay, so now the average investment that I have done here is $1,000, right? So life death I'll get $50,000. So for 62,000 I have to pay 50,000. So which is around $331 million only. Sorry, $310 million. But here I made $1,000 million, right? So still I'm in profit. So the insurance company is still in profit, right? So that's how the insurance companies work. And generally they will not go into loss. Okay. So that's insurance company. And then we have brokerages. Brokerages are firms which will invest in secondary markets or primary markets on behalf of customers. Okay, so generally we hear in the share market brokers, right? So what are they doing? They are investing on your behalf. Okay, so there are only two major brokerage firms. Okay, there are two brokerage firms and there are sub brokerage firms there. Okay, all right. So these brokerage firms are authorized to trade in the respective markets, I mean, respective trading organizations in that particular country. Okay, so you have New York Stock Exchange, where in USA and in India it is NSE or BSE. Okay, so the brokerage firms are authorized to buy the stocks in these organizations, or say suppose in these exchanges. Okay, so suppose in New York, I have a New York Stock Exchange. There are almost 1,000 companies listed, which can be traded. Okay, in the sense, say suppose Apple is there. I am a customer. I want to buy stocks of Apple. So I cannot directly go to New York Stock Exchange and buy. So I have to go through a brokerage. One example is Computershare is one brokerage firm which is authorized to buy, which is an authorized brokerage firm in New York Stock Exchange. Okay, so through Computershare, I have to go and say that I want to buy Apple shares worth 1 million. Okay, so they will buy on my behalf. Okay, so that's the brokerage firm. So for this, we should pay some brokerage amount. All right, so that would be charged by the respective brokerage firm. And again, this is regulated by the respective exchanges again. Okay, what should be the brokerage, maximum brokerage amount? It's not on the whims and fancies of the respective brokerage firm. So this will be again in depth. We will have an in-depth discussion in the coming classes. As it's an orientation session, we are just touch basing on these things. Okay. Next are the investment companies. So investment companies, again, they will have tie-up with the respective. These are not investment banks, but companies floated by or individuals who are authorized to do so only, which means they have to register their company, okay, and they are liable. Now the only difference between investment banks and investment companies here is, if anything goes wrong in investment banks, you will get the complete amount reimbursed. But whereas in investment companies, you may or may not get it. Okay. There's no regulator body for these investment companies. Whereas for banks, it's there. Why people will go for investment companies is, there's a chance that you will get more benefit from investment companies. The amount of profit will be more. Whereas in investment banks, right? It is regulator. It's a regulatory body. It's under the scanner of regulatory body, right? So the profit percentage will not be that huge, okay? And whatever is happening has to be is done legally. So there's less chance for having black money, okay? And many people want black money, right? They want to avoid the income tax, and that's the reason many will go for investment companies. Again, the problem here is, you never know what goes, how things go wrong, and you may not get the complete money back, right? But you are ready to take that risk. So that's investment companies. Unit investment trusts are registered. One second. Yeah, there is a risk is there. Yes, right, Ramakrishna. Thank you. So unit investment trusts are again, trust is something like a group of people who are what do you say, professionals in that particular area will form like a trust where they will pool money. Okay, it's self-organized. Okay, and in that trust they have investment. They have kept aside or pooled aside some money for some losses. Okay, so it's like you are asking them to trust, and they're saying, and they're saying that, hey, we have pooled some money for any losses that will be incurred in the future, so that you can go and use that amount that is present in the trust. So that amount will be set aside for future use. Okay, so it would be an independent governing body, and whatever decisions that are made, right, it has to go with the approval of that particular trust. Now you can use this as a goodwill, okay, to attract investments, and that that when the customer invests, can also invest, will also invest, and based on that, the investment will be happening. So it's generally what do you say, a limited number of trusts are there worldwide. Okay, that's more about UITs. Okay, face amount certificates. Face amount certificates are generally what do you say, like this. Suppose I have a company. I want to I want to what do you say, have some more amount from the market. I want to pull some money from the market, but which I will be using for my future investments. Okay, or for, one second, there's a question here. Are units more secure way of investment than banks? Or no, they are not a more secure way of investments. Only investment banking is the most securest way of doing, but the amount of returns that you will get through the investment banks will be regularized by the regulatory bodies of that particular company. These are what do you say? These are like semi-private maintained ones. Okay, only you are trusting based on the brand or the value of the or the face value of the persons who are sitting in that particular trust. Okay, it's like you are taking semi risk in this condition. Okay, so coming back, so face amount certificates are nothing but, see, I am an organization X. Okay, I have little money and I want to expand my business. So I have some brand value in the market, and I don't want to go through the form of shares. Okay, where the risk of what you say returns will be high. Okay, or I don't want to share the entire profit among the shareholders. So instead of that, what am I saying is, hey, give me the money. I will give you the interest more than what a bank is providing you or giving you. Okay. So for that, I'll give you some debt certificates. Okay. And this is the interest I will be giving you. So this you will have to redeem only after this stipulated time. So those are called as face amount certificates. Okay. Management. So you got the point, right? Management investment companies. Okay. Now, say suppose I have someone who knows in and out about IT industry. Okay, and how will its course of action will be in the near future. Okay, so these are also like investment companies, but what you are doing is there will be a fund manager who is well expertise in these particular in that core area, and he will be investing it regularly on the particular industry. Okay, so say suppose IT fund, he is interested in IT industry. Okay, so he will be investing in those IT stocks itself, right? Or say suppose you have someone who are more into what to say, more into some particular area, like blue chip companies, or like banking sector. Okay, so they know in and out about those particular core areas, and if anything happens, they are ready to remove the shares, or they are ready to um, invest based on the opportunity. So that sort of companies are called as management investment companies. So you'll have a regular fund manager for that. All right, so these are called as management investment companies. They are same similar to the mutual funds or ULIPs. Actually, even in mutual funds also, you will have a fund manager who will be looking into. Okay, so that's management investment companies for you. So these will be like closed end and open end. Okay, so closed end is nothing but only one time you will be investing. So one second, let me write it down. Again, it would be too much topic. I don't want to confuse you guys at this point. Let's discuss it when we discuss it in detail. Okay. So for your understanding, management investment companies are, you will have some fund manager who will be investing on your behalf, and he will be managing the assets of yours. Okay. And at any point, if you want to know what is your status of the investment, you can directly walk in, or you can call the fund manager and you can get the details. Okay. So it's like that. Now, credit unions. Credit unions are someone who have money, and they have pulled it from market, not market, from other customers, and they are ready to give you credit. Okay, so it's like this: I have a company, I don't want to go to the market, or I don't want to issue face amount certificates. Okay, instead I'll go to these credit unions, get the amount, and then invest in my business. Here, generally, these will be the amount of interest will be more than what banks will be providing. The advantage of having credit unions is you will get the money when and wherever it is necessary. Okay, it's like this. If you take from friends, it would be interest free. If you take from some lenders, private lenders, the interest will be more, right? Similarly, if you take from banks, the amount of interest will be less, but there will be a lot of what do you say, scrutiny, or your what is the profile will be investigated, right? Whereas in credit unions, you will have simple documentation, collateral damage will be less, but if the amount of interest would be more. Okay, so that's credit unions. Okay, this is a much about today's discussion, financial organizations and the type of business organizations. Okay, so any questions? So when we will have, so tomorrow's session or the next session will be more on the banking sector actually, okay? So where we will discuss again in depth about all these concepts, okay? Whatever we have discussed high level today, now in depth we will be doing it in the next session, okay? Any questions so far? I know this is very, what do you say, very theoretical session, but the primary intention is to have some understanding about the concepts of banking and financial institutions, okay? Yeah, sure, Iram. Thanks for bringing up this point. So we'll be discussing about the regulation, banking regulations, the AML concept, anti-money laundering concept, the FATCA concepts. Okay, so this we will be doing in the coming classes. Sure, this will be part of the discussion. Okay. All right. Any other questions, please? We are actually running out of time because there's the next session again that will start in 2 minutes. So if you have any questions, please keep me posted. All right. I don't see any other questions. Thanks everyone for joining this today's session. ABM and POS included. Okay. Okay. Yeah. All right. Fine. Yeah. Thanks. Thanks everyone for joining today's session. Good night and good day. See you tomorrow.